One of the biggest headaches for digital nomads isn't flights or visas or Wi-Fi, it is taxes. Now, if you're a US citizen or a resident working remotely while traveling the world, I have some bad news for you. You're still on the hook for American taxes, even if you haven't touched US soil in years. So in this video, we'll break down exactly how taxes work for American nomads and expats. You'll learn how to legally minimize what you owe and avoid state tax traps and stay fully compliant. But before we get into that, do us a big solid, hit that like button. It really helps us out in the algorithm so we can get this content to more people who really need to hear it. Now, let's get started. Let's start with state taxes. State tax laws differ significantly across the country. Not all states impose tax on worldwide income, and only some allow for foreign earned income to be excluded from state taxes. So, for example, states like Florida, Texas, and South Dakota, they have no state income tax at all, which makes them the best states to have residency if you're a digital nomad or expat. On the other hand, there are states like California, New York, which impose high tax rates and stringent tax laws. Now, if you want a full breakdown of the best and worst states for taxes, check out our other video on this topic. Link is in the video description. Basically, what you want to do is establish your domicile in a low tax state. Now, what is a domicile exactly? Well, basically, it's your legal home on paper. It's the place where you have real roots and you intend to return after you finish traveling, whenever that is. What you want to do is establish your domicile in a state with no or low state income taxes, and make sure you keep records of your physical presence, things like leases, utility bills, and other documents that prove your domicile. It's a lot of paperwork, a lot of procedure, a lot of bureaucracy, but the good news is that we have a service that takes care of that. We help you meet all the legal requirements, preventing complications with multiple state tax claims, and our services streamline your legal and administrative obligations, giving you more time to travel and less time to think about all of these tax headaches. Link is in the video description for that. Savvy Nomad, you can save thousands of dollars in state income tax, so make sure you use the code YouTube for 15% off your service. Now let's talk about federal tax. As an American citizen, you're required to pay taxes on your worldwide income, regardless of where you reside. This means that even if you're living and earning money abroad, you must report all income to the IRS. Additionally, you must report certain foreign financial assets. Every year you must file Form 1040, which we all know as the individual U.S. income tax return. Additionally, if you have foreign bank accounts or investments, you may need to file Schedule B and potentially the Foreign Bank Account Report, or FBAR, along with Form 8938 under FACTA requirements. The standard deadline, of course, for filing U.S. taxes is April 15th. We all know this, but expats are granted an automatic 2-month extension to June 15th. It's important to note that while the filing deadline is extended, any payments owed to the IRS are still due by April 15th. Naturally, if you don't pay by that date, interest and penalties will accrue, even if you file by the extended June 15th deadline. If needed, you can request a further extension to October 15th by filing Form 4868. Now, a few tax provisions provide significant breaks for U.S. taxpayers living overseas. The first is the Foreign Earned Income Exclusion. This allows U.S. citizens and resident aliens who live and work abroad to exclude a significant portion of their foreign earned income from U.S. federal income tax. Now, for the 2025 tax year, that exclusion limit is $130,000, and it's indexed to inflation, so it tends to go up every year. To be eligible for the Foreign Earned Income Exclusion, you must pass either the physical presence test or the bona fide residence test, which is detailed in Form 2555. We also have the foreign tax credit, and This is designed to help US citizens and resident aliens who pay taxes to foreign governments. Foreign tax credit basically helps you avoid double taxation, which ensures that you are not taxed on the same income in both the US and a foreign country. So with this tax credit, taxpayers can offset the taxes paid to foreign countries against their US tax liabilities. IRS Form 1116 is what you're going to need for this particular credit. Finally, we have the Foreign Housing Exclusion. The Foreign Housing Exclusion allows US taxpayers living abroad to exclude certain housing costs from their taxable income. This includes things like rent, utilities, and other housing-related expenses. To claim the Foreign Housing Exclusion, again, you want to file Form 2555 along with your annual tax return. Now, if you maintain foreign bank accounts, there are even more forms that you need to be aware of. First, you must file the Foreign Bank Account Report, or FBAR, if the value of all your foreign financial accounts exceeds $10,000 at any point during the calendar year. Now, this includes bank accounts, brokerage accounts, mutual funds, in fact, any foreign financial asset. The IRS really doesn't like when you fail to do this. In fact, it can lead to fines of over $10,000 or more. So this is something you don't want to sleep on. Furthermore, under factor reporting requirements, U.S. taxpayers must file Form 8938 if their foreign financial assets exceed certain thresholds. And for now, this is $200,000 for single filers living abroad and $400,000 for married filing jointly. Now, this form is filed with your annual tax return. And if you're a business owner, don't worry, there's even more that you have to deal with. If you're self-employed as an American nomad or expat, you're required to pay self-employment tax to cover Social Security and Medicare. Now, these taxes apply to your net earnings from self-employment and are mandatory regardless of where you live and work, and regardless if you also are eligible for things like the foreign tax credit or foreign earned income exclusion. Now, some countries do have something called a totalization agreement with the US. These agreements are designed to prevent double taxation of Social Security. In other words, if you're already paying into another country's Social Security system, you may be exempt from paying into the US Social Security system. One other thing you can do is set up an offshore structure, which can offer substantial tax advantages for digital nomads and expats, particularly by reducing or even eliminating US self-employment taxes. One way to do this is through a pure offshore setup. What you would want to do in this case is form a foreign corporation and pay yourself a salary from that corporation. And in that case, you might be able to avoid that self-employment tax. If you go this route, make sure you file Form 5471. Another way to go about this is to have a hybrid US and offshore setup. So under this structure, you have a foreign company that owns a US LLC, and this helps you keep a US presence for clients and banking. Remember that offshore structures involve very complex tax filing obligations, including Form 5471 that we just mentioned, and that's for reporting US ownership in a foreign corporation, and also Form 5472 for LLCs that are at least 25% foreign owned. So if you want to go this route, we strongly recommend that you seek professional legal and tax advice. Next topic on our list, tax residency. Spending more than 183 days in a country during a tax year often makes you a tax resident of that country. However, some countries also consider cumulative days over multiple years. Other factors that can determine tax residency include the location of your permanent home, where your employer is located, and where your family is located. So this is something you want to look into before you move abroad. As an expat, you might also be subject to certain local or national taxes, including income tax, Social Security tax, value-added tax, capital gains tax, property taxes, and much, much more. Again, you want to make sure you look into those local tax laws before you move abroad. So if you enjoyed this video, make sure you hit that like button. It really helps us out in the algorithm so we can get this content to more people will really need to hear it. If you haven't already, don't forget to subscribe. Until next time, safe travels and happy tax planning.